Welcome to TMS Insights. It's August reporting season, so it's pretty busy here at TMS, Ben. The season has started with some surprisingly very good overall flavour of some of these results.
Yep.
We're going to drill down into some. We've got a bit to get through, and we've got a fair bit coming up in the next couple of weeks as well. But let's go for one that reported early in the season and often does. ResMed, again, some really interesting findings in that report.
Yeah. Look, it was a great result on the revenue line. The gross margins that they delivered for the quarter were a bit less than the market expected. So the profit growth wasn't as strong as the revenue growth would indicate. I think that's kind of part A, and, generally a good result, great outlook, etc. The rise of these rapid weight loss drugs in America and the trial success that they're seeing, I think that's what's got the market a little bit more cagey at the moment. Mick Farrell did talk about it on the call. He reminded everyone that there were the same concerns when the elastic surgery bands were, that technology
which never became mainstream, really.
No.
It's still a small thing.
And we know that obesity is part of sleep apnea, but it is one part and there's other parts as a part of it. And as Mick sort of pointed out, there's 930 million people globally who have sleep apnea currently and are not doing anything about it. But I think I've spoken to we've listened to some analysts talking about it and some other people in the industry. It's probably something which is going to become clearer over the next 5 years as these drugs go through clinical trials. And
they can all succeed in some ways without impacting on ResMed. I think the drugs are planned to have no subsidies and are going to be very expensive, so the average person may not be looking at it anyhow.
Look, there's a lot of arguments for why it's not a threat, and I think if you read all of the analyst research, and these are highly qualified guys in the industry, they all see it, I think, largely as a very small potential threat over a long period of time. But the biggest issue ResMed still has ultimately is that there's rampant demand for its AirSense 11, which has just been released. They are, to some new patients, selling the AirSense 10, which is now 7 years old, and they're doing that at a very good price because Mick sort of said, look, we either decide to treat them, bring them into ResMed. We know they won't leave once they come, but we're selling a device to them at a much lower price than we normally would, and that's what's impacting our margins.
Yeah,
and I think his view is take a long-term view, and this is the right thing for the business, but in the short term, it's a bad thing for margins.
It is. And without dwelling on that stock, because we've got others to talk about, the other thing about it is, and we'll talk about other stocks in this way, ResMed did what it often does, and we've been watching these stocks for a long time.
Yeah.
It sells off after results most times.
Yes.
It's almost, there are stocks that typically do that. Yeah. ResMed's one of them.
Yeah, it's bizarre. And I think, like, every analyst I looked at, and there would be about 12, I think, have a buy on ResMed. Yep. And I think it was very aggressively owned by fundies, etc. Yeah. So it's sort of like, where does the follow-on buying come from? Everyone's already pointed in that one direction, and you get one minor negative in the result, and the exact opposite can occur.
And I'm going to jump into Seek because that's a typical stock too that sells off after its result. And, again, there's so much to break down in that result. We obviously understand the core business is, robust and, will perform in the economy. Some interesting finds about how they're forecasting based on the economic reads.
Yeah, so that was one thing I took out of that call was great result. Guidance was a little bit softer than the market expected. It's normal. Yeah. And there's this growing venture capital arm of Seek, and they excluded that from the earnings guidance, and that's going to be choppy for sure.
And that's because they backed it out and they realised a paper gain on that too. So, but that'll probably help us understand the company going forward.
I think so.
And that's going to emerge into something pretty special.
Yeah, I think so. And, Andrew Bassett is steering that part of the Seek business these days. But the interesting thing is Seek traditionally have sat down and they've looked at the employment landscape and, how their business, and they've given guidance based on that. Yeah. And they've moved to a methodology they advised with Ian Narev advised for this call, where what they're doing now is they're looking at the 30 main economists in the country, what their predictions are for what unemployment will do over the next 12 months. And then they're saying, okay, based on what these guys think is going to happen, this is what we know our business will probably do on the back of that, and that's where the guidance is coming from.
And we know that's 4.5% is what.
So I would say, as we've said in this a number of times, the economists have been awful at calling, particularly I would say in the last year, what's going to happen. I mean, their average expectation for where rates would peak a year ago was 2.6%.
Yeah.
It's now at 4.1%.
So don't rely on it, but they have to give guidance on something, and
they do.
And again, somebody else other than the company who's attaching the numbers to it. So that's fine. We can live with that, can't we? Yeah.
It's a pretty nasty outcome, I think.
Yeah, but, it's probably going to be understated, which is fine. Yeah. And they've been a serial under-promiser. Seek and a long-term player. So we still very much like them.
Yep.
Look, an outstanding result was car sales, Ben. That was so far probably the standout for me.
Yeah.
I mean, the business locally and overseas strategy are really working for them at the moment.
Yeah, it's like the car sales and another thing I would just call out of the results we're seeing is we are still seeing companies cycling the COVID booms or depressions, and for some companies, these things are normalised quickly, and others are normalising slower, and that's why I think you got some of this extra volatility. But car sales are just something that seems to have stuck. There are some demand for cars and the turning over, but great job management's done in that business as well has been good.
Management, awesome. But I'd also say too, Ben, the thing that's interesting is, of course, they are so economy linked. This is following on from the Seek thing. The layman would think this business wasn't doing that well.
Yeah.
But you've got to understand the role of management and how they've positioned that business. And businesses generally are doing better than the economy, the ones that we're looking at. So this is the takeaway that you've got to get. You can't read the front page of the paper and the misery about the economy and expect it to turn up in these stocks.
No.
Because it's not happening. They're doing better.
Yeah, completely. And they're driving a lot of, if anything, as we often see in downturns in the economy, not that I'd say feels like a downturn yet to me, but when you do get them, the number one player comes out of it even further ahead because the weaker players fall away during those periods.
Right. It's a real thesis.
I mean, who's the competitor's car sales?
Well, it's daylight second.
Yeah. You couldn't even name it.
Facebook or something, honestly, Marketplace or something. Gumtree. So good luck. Cochlear had a good result, man.
Yeah.
That again, talk about COVID as you did. That's on the improve on the back of elective surgeries, recovery, and it's a global business, obviously, of some scale now.
Yeah. So I think the surprise there, and the CEO called it out. He just said, we knew that there'd be a catch up in terms of the number of kids and people who needed this surgery. And it was put on hold during COVID. We knew it would be a catch-up, but it's happened a lot quicker. So there's been a pull forward of demand, and that's really seen them not only deliver a great FY23, but they've sort of said, we're still seeing that in FY24 as well. So that's a business that's humming along. Looks expensive, 50 times plus.
It always does.
Yeah, true.
And it had that brief sell-off in COVID, but it does. You're right. CSL, they warned of a profit outlook in June, so we're prepared for the worst, and it didn't. It was a solid set of numbers.
Yeah, that was a good one for mine because when they did a call when they had that warning I think it was in June, and what they effectively said was, these plasma costs, etc., they're just not normalising in the United States as quickly as we expected. This is on the cost side, and therefore the margins, as we've resumed, are coming under more pressure than we expected, and we're not sure how it looks like. And I don't know whether it's the new CEO's had a bit more time behind the desk, and they were much more confident on this call that those plasma costs were going to normalise, and they actually said, there's been a 17% reduction in
those 8 weeks.
Those 8 weeks.
And they said, we're as pleased as we are with that, we're not going to forego our market share to drive that margin even higher. So we're happy with where it's going progressively, which is good. And this is what investors need to hear occasionally, is you've just got to play the long game too, and you can't necessarily just try to buy more market share now and the expense of everything else.
So he said, we could cut the costs of what we're going to pay for blood tomorrow back to we'd still have, but our competitors will probably pay a bit more, and it would be at the long-term detriment of the company, but you guys would be thrilled with the short-term margin outcome. And that's the arm wrestle that happens in markets. And it's you want business to do the right thing, and that's why we look for, founders and the people who we believe are going to make the right decisions, and they're not worried about, in 2 years I'm leaving and I need to turbocharge, because anyone can turbocharge a share price.
And everything we were saying, you've got to have these people who know what the long term looks like and prepared to wear the flag. Now, CommBank, good result quickly. Confirmed that it's the standout in the bank sector.
Went ex-div already. So, that was, I think we've had a trading update from NAB and from ANZ as well since. And again, CommBank well ahead, and some interesting slides in there about the pain in the economy and where
the spending's happening.
Yes, younger people are certainly feeling a lot more pain than the older generation as this year has played out, which is kind of unfortunate.
The inflation causes and the inflation sufferers, aren't they, really? So it's sort of a demographic sort of thing. And just finally, Challenger, who had these are improving times for them, basically.
Yeah, look, I thought that was a really good result, and they're now moving into a sweet spot where the rates that they're offering on their annuities have significantly improved.
The Challenger in that business too.
Challenger is morphing, and it's not apparent in the numbers yet, but if you go back 2 years, the bulk of their annuities business was for institutions on very short-dated terms. What's happening now is that the retail side of it, which is much higher quality, higher margin, is growing exponentially. The insto part's dropped off, and much longer term. So, like someone locking in a 10-year or a lifetime annuity. So you're going to earn those margins for longer periods. And it's only just going through this flip. So
the rates have just made it sensible for
so quickly.
So, it'll keep going for a while.
So I think that one looks good.
Right. Okay, we've got a lot more reports to get our heads around in the next couple of weeks, so we'll be back with another TMS Insights later in August.